Hello everyone and welcome to Fun with Fitzy and Sharma. As you recall, this is part 2 of chapter 6.2, source documents.
So the first source document today is the check copy. And many of you guys have seen checks before through your parents and guardians when they write a check to somebody that they owe money to. So a check is when a payment is made by the company, in this case our company, known as Masthead Marine. So there's different parts of the check. We're just going to go through them real quick. First, you have the number at the top. It says 01011 here, and that's just for accounting and cross-referencing. Next, you have the date of the check. So next we have the payee to whom the check is issued. This is really important here. The check is being issued to Sterling Spars. That's the person that we owe money to, or the company we owe money to. And we are Masthead Marine. And usually the company that we are is listed at the top of the check in larger letters. Next, we have the amount of the check. And here it's really important that it's listed in two places. We have a numerical form at the top, $1,802.90. And then we have it in written form, $1,802.90.
Why would we have it written to, Ms. Sharma?
There's two reasons why. Some people have messy handwriting like myself, so then you have the numerical form written there for clarification. And another reason, as you, Ms. Fitzpatrick, have taught me, is because if you have it written out in two different forms, it's very hard to change the number. So for example, if I wanted to change this to $11,802.90, very easy. You just perform some fraudulent activity there, Ms. Fitzpatrick. But then it would be really hard for you to come back to the written word and change the 1,000 to 11,000.
Yeah, I see. They would see, the bank would know right away.
Exactly. So next, we have the owner's signature, and this indicates that the owner has approved the check to be written. And at the bottom, not as important, but we have the tear-off portion here, and it's just used to provide detailed information about what is the $1,802.90 for. Here you can see it's to pay off two invoices. And the original is sent to the payee, to who we owe money to, and you can see there at the bottom there's other copies that are just kept on file for us. Most important here, we have our journal entry. So March the 6th is the date. We owed money to Sterling Spars, so now we're paying it off. So we're going to debit accounts payable, in this case Sterling Spars, and then we're going to credit bank, because our bank goes down because we're paying him or her off, for $1,802.90. Reference, you can just write the check copy number.
Okay, the next source document that we have is called a Cash Receipts Daily Summary. And also, while I'm thinking about it, sometimes it might be called a Cash Receipts Weekly Summary, because some companies don't do this on a daily basis. Sometimes they do it weekly or monthly.
That's very interesting.
Yes. And actually, you'll see in class tomorrow when we come in, we'll have an example of the Cash Receipts Weekly Summary for you guys. So what is a Cash Receipts Daily Summary? Well, you can see it's a list of payments received from our customers. So in this particular case, you can see over here, A. Baldwin and F. Perry, I think it says, and Pier 10 Marina have all given us checks on that day. So what is included on the daily summary? Well, of course, it's the date. So on March 9th here, you can see that we received these checks. What was the check for? In this case, it says on account, which means A. Baldwin is paying off the balance that he owes us instead of paying a specific invoice, whereas these two companies are paying invoices. And in particular, you'll see Pier 10 Marina is paying two invoices at once, which is why we have a subtotal here. So don't let this fool you. We've just added those two numbers, and remember, in accounting, when there's subtotaling to be done, you move it to the left and then move the correct answer to the right. And then these are being added up for this total here, which is $2,142.24. There are different copies of this. The original will go to the accounting department, which is where we will be, so we can do the journal entry, and a copy will go in a file for the company to keep. So what does the journal entry look like in this case? Well, remember, we're receiving money from these companies. And just to remind you, it's a cash receipt, so we're receiving. So when we receive money, our bank goes up, therefore we're going to debit it. And we debit it for the full amount here. And interestingly enough, interestingly enough, students always ask me, why can't I just put accounts receivable in the total? Well, we need to list out each debtor in this particular case so that we can reduce their account.
That makes a lot of sense, Mrs. Patrick, especially when you think of T accounts.
That's right. That's right. Otherwise, if we don't really know which accounts receivable to credit if we don't accredit each single one.
Exactly. So next we have a bank debit advice. In accounting, you can come across that or a bank credit advice. The easiest way to remember this for most students is that when you receive a bank debit advice, you credit the bank account. So you do the opposite of what the source document is. When it's a bank credit advice, you actually debit the bank account. So here, just going through what this is all about. A debit advice, as we have here, indicates an amount of money that will be withdrawn from our bank account. So if we have money going out of our bank account, we'd have to credit our bank account. And that's what it is. You're doing the opposite. Next, if this was a credit advice, this indicates that the amount of money will be deposited into our bank account. So to increase your bank account, we have to do a debit. So again, we're doing the opposite. So just going through the elements here of this, this indicates whether the account will be debited or credited. So we receive this and it says our account is being debited by the bank, but we again do the opposite. So this is a bank debit advice, but we credit. Thank you, that's exactly what it is. Next we have the date of the entry, very easy. Next, we have the amount that it's for, that's always given to you, and then an explanation of the entry. So here we have interest on a bank loan. So the bank loaned us the money, but we have to pay the bank back for it. So here is the transaction. The date's given to you, bank charges and interest is going to be debited for $113.50, and you're going to credit your bank, again, because it's a debit memo, you're crediting bank for $113.50. So bank charges and interest, you can see, is a type of expense. It's something you incur because of the day-to-day operations of your business. And just as all expenses, you debit them.
Right, and guys, I would keep in mind, you're going to see bank charges a couple times in the textbook, so don't fool yourself when you're making income statements. Don't forget to put bank charges in your expense column. I've seen it happen before. Okay, so what we're going to talk about now, I want to explain to you guys why we do the opposite. So the bank is the one that's actually sending us the source document, right? So in the case where you get the debit advice and you credit your account, or vice versa when you get the credit advice and you debit your account. So why does that happen? So each party here has their own account. So for example, the Toronto-Dominion Bank has an account for you. And we're Masthead Marine. So let's pretend we had $100. We received $100 from a customer today. So if this was our bank account, we would debit our account $100. However, when we put it into the bank, they would have an account for us, and it's actually, let's call this FITSY. No, it wouldn't be FITSY. Let's call this Masthead Marine, because it's not me, AP. Now, they might not necessarily call it accounts payable, but it's easy for you guys to understand because they don't get to keep this money. It's our money. They're holding it for us. So in essence, they have an accounts payable to us for $100. However, as you know, if you put money in a bank account, you may earn some interest. So for example, let's say you earned $5 interest, which is a lot of money on $100 right now, but let's wish it was that. They would owe us that $5. So really, we would have $105 now in our bank account. We would receive a credit advice in that case. So this would be a bank credit advice. And we would then know to journalize that transaction and debit our account because we just got $5 from the bank. So that in our bank account, our company record, which we call bank, we would call it $105, but the bank owes us. So that's why when we receive a bank credit advice, we need to debit it.
That makes a lot of sense, Ms. Fitzpatrick, because if you look at your T account, TD Bank actually did a credit for the $5. So that's why, from their eyes, it's a credit advice.
Exactly. So they've credited your account. but we need to, as the accountants, debit the account of the company we're doing the accounting for.
That's really well explained. Thank you, Ms. Fitzpatrick.
You're welcome.
So here we have a summary of everything that we looked at during today's video and the last one as a summary of all types of source documents. So you can now pause the video if you'd like and make notes to summarize everything within the last 2 days. And these are 3 source documents so far, and on the next screen you're going to see the remaining. It's a very detailed, but it's a very good summary that you could reference when studying for a chapter test or the examination.
Perfect. And as we just talked about, you'll see here the last 2 source documents are the bank debit and credit advice. And you can see with the debit advice, we're actually going to credit our account. And with the credit advice, we're going to debit our account.
And the types of debits and credits there is really important as well. For the bank debit advice, it's interest expense or bank charges versus the bank credit advice. The last one there, it's interest earned.
What type of account is interest earned, Ms. Sharma?
It's a type of revenue account because you're making money. And if you think about it, how do you increase the revenue account? With a credit.
That's right. Good job.
So to refer to this again, you can take notes or you can refer to Chapter 6 source document and HST reference sheet that you will find in your online environment. It's a great reference sheet and it includes what we just learned plus HST, which is tax, that we're going to be looking at in the next lesson.
Okay, so in summary, we have just a list here of source documents that we did not cover. You're going to notice when you're an accountant, because I'm confident you will be, that you're going to see things like receipts, bills, invoices that are emailed to you, and so on and so forth. A couple I really want to highlight today are the bills. You're going to see in the transactions that we're going to be working on lots of bills from hydro companies or the utilities, and this is when they are just telling you how much you owe them. And down here, the memos from the owner, you know already because we've done some examples that when the owner takes money out, that's classified as drawings, and he's going to send you a memorandum, which is the long form of the word memo. Other things, bank statements and cash register tapes, you'll see.
So by now, what you should know after watching the last 2 videos, you should be able to identify and name each source document, and you should be able to journalize the transaction for each source document from the perspective of all the companies that are involved in that transaction.
Hope this was helpful for you guys, and thanks so much for watching.